Hello, it's Julius from Basic Financials. This video is about gift aid donations. Now, it's for something that is very common now, not just in gifting to charity, but also you probably come across it when you've gone to, say, a National Trust place or an English Heritage National or anything like that, maybe a castle or something like that. There's often something on there when you buy your ticket. It says, "Oh, do you want to gift aid this?" And you might tick the box and say, "Yeah, no problem." Not really know what's going on. You just do it anyway. But so bear in mind those things, and also just normal gifts. When you gift aid a donation to a charity or to one of these places that you might go to, what you're saying is you are allowing the charity to claim back tax relief on your gift. So let's say you do a donation of £80 and you tick this box to say, "Yep, I'm going to gift aid my donation." That £80 is treated as £100 gross donation, and you've had tax relief, basic rate tax relief at source of £20, meaning that the donation that you actually end up paying is £80. Now, the charity will claim back from the government the £20 tax relief. So they end up getting your £80, and they also get £20 tax relief, i.e. the tax relief that you got at source, they claim it back. Now, there's two things to watch for. It works a little bit like pension contributions. If you're a higher rate taxpayer, so your income's over, say, about 50,000, then you're entitled to claim back extra tax relief. You get 40% tax relief on your donations. So when you pay £80, treated as £100 gross, the charity can claim back 20, but you can claim back another 20, because 40% of £100, that's £40. So you've already had the 20 at source, but you're entitled to another £20. And the way you get that relief is through your tax bill. So you'd have a reduction from your tax bill, but only if you claim it. Now, the way to do that is similar with what I've mentioned in previous videos about pension contributions. You have to claim it through your maybe tax return. You could write to HMRC if it's a one-off, but if you're regularly doing it, you might want to do a tax return, especially if you're a higher rate taxpayer. Make sure everything's correct. And now, pension contributions also, charitable contributions also come off your total income when you're thinking about things like the child benefit charge. When your income is between 50,000 and 60,000, if you or your partner are receiving child benefit, you have to pay that back. And by the time your income is 60,000, you've paid it all back. Pay nothing back at 50,000. I've done a video about this as well. So between the 50 and 60,000, you pay it all back. But your income is reduced by the amount of the gross pension contributions. So I keep saying pension contributions. It is actually reduced by your pension contributions, but it's also reduced by the gross donations as well. So that's another reason to make sure you keep track of any donations you've made, or those trips you've made to National Trust places, or possibly if you make a gift of National Trust membership to somebody, you can use that as a gift and include that in your donations total. Now, the other thing to watch out for. Let's imagine your mum or your dad is a pensioner, or not with a great amount of pension income, and they don't pay any tax, but as is common with that generation, they tend to make quite a few gift donations, mainly because they get bombarded through the post with lots of letters. But if they tick this box to say, "Oh yes, I'll gift aid my donation," they could end up with a bit of a problem, because you can, if if you tick that box but you don't pay tax because your income isn't high enough, then you could end up having to fork out the difference. So if you said, yes, I'm going to gift aid my donation, you pay £80, the charity claims back £20 because it's treated as £100, but you haven't paid £20 tax, then HMRC can come to you and say, well, you owe us £20 tax because you said you were going to gift aid the donation. So it's very important that if you don't pay tax or don't pay hardly any tax, and you decide to make donations, you want to be thinking about whether you're actually going to be gift aiding it or not. The thing to do is, if you're not paying tax, don't tick the box. Now, obviously, this is more likely you need to be watching out for other people for this. If you're watching this video, you're probably not going to be in that situation, but your spouse might be, or your parents might be. Now, the other thing, I suppose, thinking about spouses, if you've got one spouse on basic rate and you've got another spouse on higher rate tax, then it's better for the higher rate taxpayer to pay the donation. So for the reasons you'll see from what I've just said, the higher rate taxpayer can get that extra money back. So always think about that. It's easy enough to put it into the higher rate taxpayer's name if they're making the donation. I think that will probably do. Again, if you like and subscribe and leave any comments or questions, and I'll see you again soon.